All right, listen, guys, I get it. I know exactly where you're coming from. I'm a millennial as well. And as a millennial, I feel the frustration of our entire generation when it comes to buying a house. I first got into this business a little over a decade ago, back in about 2014. My vision being that I wanted to help my friends and peers and colleagues at the time to be able to learn more about real estate and start buying houses and maybe start investing in houses. And wow, it has been a long journey of, for the most part, most of my peers not being able to afford to buy houses, especially not in Southern California. But here we are. This is the one we've been waiting for. I feel like right now, fall 2025 is probably the best time I've experienced, at least so far in my decade of career, for people to buy houses. It's not necessarily for everyone right now, but if you can pull it off, right now is just an absolutely ideal time. And let's talk about all the reasons why. Let's begin with last week. We started talking about how this is the slowest summer in a decade for selling a house. And we looked at it primarily from a seller's perspective. So if you're watching this right now and you are a seller, please check out my page for last week's video. And that's the one about if your home has been on the market for more than a month, watch this video. And in there, I talk a little bit more about some of the tactics and strategies that we use with our clients to make sure that we sell people's houses in 8 days or less without compromising on price. We did talk a little bit from the buyer's perspective last week, kind of towards the end, but for this week, I want it to be the reverse. We're going to focus primarily on buyers, and maybe you'll catch a few hints for selling a house along the way. Let's take a look here at what kind of some of the numbers are saying. We are showing here, you see, going back to 2012, these are Redfin's numbers on the typical number of days on market. And you see, so it's been about a decade since the last time the typical home spent 43 days on the market, median. Here we're looking at kind of how the overall housing supply looks. This is like the total number of houses for sale. At the top end here of the chart, it's up to about 2.7 million, about back in 2012. And you see we're still down quite a bit from where we were at back then in the wake of the Great Recession. But you can see relative to everything that's happened since the pandemic, it's a pretty strong amount of supply. So I think it's a near a 5-year high on that. Um, let's see. And then here is the one that everyone's kind of been, I guess, thinking about or hoping for is price changes, year over year price changes. So you can see here, to no one's surprise who's been actually actively house hunting, you see this huge spike in price changes going into like right. So this is the pandemic here, and then boom, over the course of the next year, huge increases in home values, and then a quick little correction once the interest rates hit all at once, kind of slam the brakes on that. And now we're sort of tentatively kind of hitting kind of a more stable pattern since then. And you see we are nearing a point of zero growth, but actually, see, this line is zero. We actually have not gotten to a point of major price drops, at least not in aggregate. But one of the things that I talked a lot about last week and that I want to really, really emphasize for buyers looking at this now, while these are all, everything on this page is like an aggregate national number, you really want to remember that basically this is one of the most hyper local, volatile times in real estate history. You can look at a house that just sold for $100,000 over ask here in Southern California, and then get in your car and drive 20 minutes to a house that's been sitting on the market untouched for 3 months. And so, there's just it's very difficult to try to come up with any one generalization about the entire market, which is why I'm not going to sit here and let's see, I might be skipping one, but yeah, let's skip over to this one where they're basically trying to say, is it a buyer's market or a seller's market? And as you can see, they're doing this also just sort of based on a number of months on the market, and essentially saying that if it spends 6 or more months on the market without a buyer on average, then it's a buyer's market. I think that's a very conservative way of looking at it. I think it's going to be a long, long time before we're in a situation where, houses are just sitting forever and, prices are plummeting and, all this other stuff. There's just a lot of factors that are going to kind of keep the numbers propped up with certain support lines. I don't want to get we don't need to get too technical about that right now, but long story short, I feel like there's just so much money, institutional money sitting on the sidelines right now waiting to jump into the market. And whenever they see in their target areas prices drop, let's say 5% or even as far as 10%, they just jump in and they start, buying stuff. And that keeps the prices very stable, artificially stable, but stable. Um, but at the same time, there are certain areas where things are experiencing more severe crashes. So here, we talked last week a little bit about Cape Coral, Florida. This is one that says it's ground zero for the 2008 housing market crash. They're, I guess, broadly saying that Florida was the place that signaled the 2008 crash. I don't know about that necessarily, but what we are seeing here, just really in the first paragraph, I think this really says it all. Between May 2020 and May 2022, the median sale price of a home in this city rose from $239,000 to $436,000. So things got so compressed and competitive so fast that prices very nearly doubled. And now what we're seeing is it is crashing back down to 360,000, which is still quite a bit above where it started, 4 years ago. So, so it still went from 240,000 to 360,000. That is not bad. um Now, I would say now obviously it's bad for anybody who bought last year and then is trying to sell this year. But I guess what I'm saying is that keep an eye out for markets where things just artificially inflated to astronomical levels between 2020 and 2022, and now is experiencing what I would call a correction to that, and not even a correction back down to 2019 levels. It is just sort of a, it's a little gentler than that. I did read somewhere else that something like more than half of the homes in this city, uh, they just decided not, or more than half the homes that were on the market in this city, they decided, this is again Cape Coral, Florida, they decided to just pull them off the market. They just kind of gave up on trying to sell their houses because the prices were dropping too far, which is another, big deal. And so here we see one that kind of gets more city by city. I know this is not very visible for the live stream right now, so I'm going to post a copy of this in the comments below this video. But basically, what we're looking at is a city by city breakdown of since 2018, seeing what percentage of homes were price cut in that area, and they chose the baffling color scheme of going from brown to teal. Brown being the lowest number. I think it's like 15% or lower percent of homes that cut their prices. And then like dark teal here appears to be about like 30% or higher. And so basically what this is saying is that Denver, Colorado, Phoenix, Arizona, and Raleigh, North Carolina, all three areas that were on everyone's top 10 lists to buy here 5 years ago, are now experiencing the most um, uh, highest proportion of price cuts for homes listed on the market. Okay, okay, okay. Let's get to more local. Okay, let's talk about the state overall. We're just going to look at just one or a couple quick numbers here. And again, these are Redfin numbers. I like Redfin for some of like the big stuff, and then Zillow has really good numbers for specific zip codes and cities. But here we've got median sale price in California, $830,000. Here in Orange County, it's uh, I think depending on the area, it's between like 1.1 to 1.5. Here, number of homes sold, 25,000. All right, median days on market, that's the one, 44 days. And we're going to keep that in mind. So this is just pretty much the national average, as you may recall a couple slides ago, that was 43 days. So California is pretty much in same pace as the rest of the country. But as we'll see here in Southern California, I mean, just because it's the median doesn't mean that you can really guide your uh, individual purchasing off of that.